The Psychology of Successful Property Investors. Author, Dr. Pooyan Ghamari, Swiss economist. Investing in real estate isn't merely about crunching numbers and analyzing markets, it's also about understanding the psychological traits that drive success. Mastering the mental game can be just as crucial as understanding financials. This article explores the key psychological traits and strategies that successful property investors use to achieve their goals and maximize their returns. Long-term perspective: embracing patience. The long haul. Unlike stocks that can provide quick gains, real estate often requires a longer time horizon to realize significant returns. Successful property investors understand the importance of being patient, knowing that real estate investments typically appreciate over years, not months. Strategic vision. These investors set clear, long-term goals and stick to them. This involves selecting properties with strong growth potential, considering demographic trends, and planning for long-term gains rather than short-term profits. Building for the future. Generational wealth. Many investors look beyond their lifetime, aiming to build wealth that can be passed down to future generations. They see property investment as a way to create enduring financial security for their families. Expanding portfolios. Successful investors are constantly looking to grow their portfolios. By reinvesting profits into new properties, they leverage the power of compound growth to build significant wealth over time. Effective risk management: recognizing and assessing risks. Thorough risk evaluation. Astute investors spend considerable time identifying and understanding the risks associated with property investment. They are well versed in the nuances of market volatility, economic shifts, and property-specific issues. Mitigation tactics. To manage these risks, they employ various strategies such as purchasing insurance, setting up contingency funds, and maintaining a diversified portfolio to spread risk. Diversification. Spreading investments. Diversifying across different property types, residential, commercial, industrial, and locations helps mitigate risk. It ensures that poor performance in one area doesn't jeopardize their entire investment portfolio. Balanced asset allocation. They balance their real estate investments with other asset classes like stocks and bonds. This holistic approach helps stabilize their overall financial portfolio. Emotional discipline. Staying objective. Data over emotions. Successful investors make decisions based on solid data and thorough analysis rather than emotions. They avoid the pitfalls of getting swayed by market hype or panic selling during downturns. Maintaining composure. They remain calm and collected, even in the face of challenges such as market downturns or property issues. Their resilience helps them stay focused on their long-term goals. Learning from setbacks. Reflective learning. Setbacks are seen as opportunities to learn and improve. Rather than getting discouraged, successful investors analyze their mistakes and adapt their strategies accordingly. Resilience and adaptability. They are adaptable, willing to adjust their strategies as needed to respond to market changes and new opportunities. Commitment to continuous learning. Staying informed. Market education. Continuous education about market trends, economic indicators, and investment strategies is a priority. This ongoing learning helps investors make informed decisions and stay ahead of the curve. Professional development. Attending industry seminars, workshops, and conferences allows them to network and gain insights from other professionals, enhancing their knowledge and skills. Learning from experience. Analyzing failures. Successful investors view their mistakes as valuable lessons. They dissect what went wrong and use these insights to refine their investment strategies. Building expertise. Over time, this reflective practice helps them build a robust understanding of the property market and improve their investment acumen. Networking and relationship building. Strategic networking. Building connections, establishing relationships with key players in the real estate industry, agents, property managers, financial advisors, and other investors, provides invaluable support and insights. Collaborative ventures. They often engage in joint ventures or partnerships to leverage the expertise and resources of others, enhancing their investment capabilities. Leveraging professional advice. Expert consultation. Successful investors frequently seek advice from experts. Whether it's property managers for day-to-day operations or financial advisors for strategic planning, leveraging professional expertise helps optimize their investments. Mentorship. They also seek mentorship from seasoned investors, gaining insights and guidance that can help navigate the complexities of property investment. Financial acumen. Budgeting and financing. Effective budgeting, keen financial management is a hallmark of successful investors. They meticulously track income and expenses, ensuring positive cash flow and financial health. Strategic financing. They explore and utilize various financing options, selecting those that align best with their investment strategies and goals. Cash flow management. Prioritizing income. Ensuring properties generate sufficient rental income to cover expenses and yield a profit is crucial. This focus on positive cash flow supports long-term financial stability. Prepared for emergencies. They maintain contingency funds to handle unexpected expenses, ensuring their investments remain secure even during challenging times. Adaptability and innovation. Flexibility in strategy. Responsive to change. The ability to adapt strategies in response to new market information or personal circumstances is vital. Successful investors stay flexible and ready to pivot when necessary. Embracing innovation. They are open to innovative investment strategies and technologies, such as data analytics for identifying opportunities or sustainable practices to enhance property value. Staying ahead of trends. Market awareness. Keeping an eye on market trends and anticipating changes helps them stay proactive rather than reactive, positioning themselves advantageously in the market. Thorough due diligence. In-depth research. Comprehensive investigation. Before making any investment, successful investors conduct thorough due diligence. This includes researching the property, local market conditions, and broader economic factors. Assessing risks. They carefully evaluate potential legal, financial, and market risks, ensuring they are well informed and prepared for any challenges. Legal and regulatory compliance. Staying compliant. Ensuring properties comply with all local laws and regulations is essential. They stay informed about any legal changes that might affect their investments. Seeking legal advice. Working with legal professionals helps navigate complex property transactions and ensures all legal aspects are covered. Conclusion. The psychology of successful property investors involves a blend of strategic thinking, emotional discipline, continuous learning, and effective networking. By cultivating a long-term perspective, managing risks judiciously, staying emotionally detached from investments, and committing to ongoing education, investors can significantly enhance their chances of success. Building strong relationships, being financially astute, remaining adaptable, and conducting thorough due diligence are also critical components of a winning investment strategy. Mastering these psychological traits and strategies enables investors to navigate the complexities of the property market and build a resilient, profitable portfolio. Ultimately, success in property investment is as much about mindset and behavior as it is about market knowledge and financial savvy. Dr. Pooyan Ghamari, Swiss economist. For more insights on property investment and economic strategies, visit A.Land.